You want PowerPoints? We got PowerPoints for this hour. Stocks soaring right now. The Dow, the NASDAQ, and the S&P wiping away Friday's losses. The better part of 1.5%, 1 2/3, 1 3/4% gains for the industrials. The industrials, materials, and technology sectors, they are the ones that are leading the way. In terms of individual names, General Electric, Walmart, and Boeing, three companies you might have heard of, have been leading the Dow. TECO Energy leading the S&P 500, up 24% this hour. Among the major ETF movers this hour, the XLY, consumer discretionary, up more than 1.5%.
Tempo momentum seems to have really slowed here. The ticks are just flat.
The market vectors, oil services, up 1%, and the KBE S&P Bank ETF is up 2%. If you missed any of the stories, the big ones in the past hour, go visit our website at powerlunch.cnbc.com, Mandy.
Okay, well, stocks I can see here are back above 300 points to the good for the Dow, trying to recover again today after their second worst week of the year. So today's Yahoo Power Poll asks, are you buying? 44% say yes, buying on the dips. 39% say no, stocks are still going lower. And 6% say I am moving into cash. Well, thank you very much, everybody, for responding. But the markets are bouncing back today. So is the worst behind us, or is a September swoon still possible? Also, cholesterol price wars. How much is too much for a drug that actually works? All that and more coming up. You're watching CNBC's Power Lunch. First in business worldwide.
Hello, world. Here's what is ahead on CNBC. If you think stocks are going crazy because people are worried about the economy, we have got a guest for you. He lays out the reason you should not be worried, at least about the economy. Plus, the one thing that most aren't talking about that could be a big risk for stocks that we will talk about, and what to expect from Apple's big event. Will Tim Cook surprise everybody tomorrow? That is all ahead. But right now, let's get back down to Mandy at the NYSE.
Okay, I'm ready to be surprised. Thank you very much, Brian. Let's take a look at the markets. We're going back up again, guys. So the high for the Dow today was 337. We're currently sitting at 312. The NASDAQ and the S&P are also doing very nicely, all gaining by nearly 2% at this stage. So let's bring in Kenny Polcari, back from the Cape, CNBC's market analyst and director.
And there's the move to 55.56.
How much are we
just
seeing
hit it.
Leadership and some of the big name stocks out there, the ones that were really used as cash machines on the way down?
Well, and I think that's true, right? Because in times of angst and nervousness,
55.75, almost perfect to the tick.
Where they can make sales and raise cash. And
right.
so some of the big names, and Tyler said it earlier, GE, Boeing, some of these names have gotten so beaten up and were used in that way that when the market turns around like this and you have a pop, those are the first ones that people get back into because they're liquid, they're easy to trade, they can get in and out of them, and they were so beaten up.
So you don't think we're going to retest the lows, but you do think maybe we're just going to be really choppy, triple-digit moves like we're seeing up, down, and range?
I think we're stuck in this 1920, 1970 range. I don't get the sense that we're going to test 1865 again. I mean, listen, unless China pulls another devaluation.
By the way, I'm not saying it's definitely going to just reverse and go all the way back down, but that was a target to sell into some strength.
Until after we get through next week where the Fed is going to make this announcement.
But you don't think that announcement is going to be a hike, though, do you?
I don't think it's coming yet. I think it's coming in November, December. I don't think it's coming in September.
How will the market react if that big banner comes out and says no hike?
No hike. I think the market's
No
prepared
change.
for no hike. I think actually the market is pricing in no hike at the moment. So therefore, I don't think there'll be much of a reaction at all.
Okay, so what will the reaction be if it's hike?
Well, I think if they do hike a little bit, and even though 25 basis points is not a big deal, I think you'll see the market back off. But I think it'll find stability down at the 1920 level because it's absolutely expecting at some point the hike to come. And I think for the most part, investors are okay with the 25 basis point. I just don't think that they believe it's happening next week.
It's only a 25 basis point hike, potentially off zero for.
I hear you. That's why it's so ridiculous to keep talking about this in terms of the impact it's going to have, because we're basically at zero, and we're still going to be at artificially low rates even after they hike at 25 basis points. I just think that the Fed missed their opportunity early in the year, and to do it now in the middle of September turmoil doesn't make a lot of sense to me.
You must have read Bill Gross's I.O. when he said he also they missed their opportunity at the beginning of the year. Yeah. Thank you very much for joining us. Good to see you again, Kenny. Tyler, over to you.
All right, Mandy, that'll do it pretty much for this first hour with a powerful rally underway on Wall Street. We're going to say goodbye and hand it over to Brian. Hi, Brian.
Hey, Tyler, Mandy, not a bad way to start the week. Thank you. It is 2 o'clock on Wall Street, 11 a.m. in Omaha, 1 o'clock in Omaha. What am I saying, Nebraska? The Dow is well up into the triple digits. We are more than 300 points to the upside. Hi, everybody. We are Brian and Melissa joining us. The Dow up 315 points. You got gold slightly higher, oil slightly lower. Welcome, everybody. All right. Despite today's rally, though, your next guest says that all is not well in Stockville. In fact, there is something happening behind the market curtain that you need to be aware of. That guest is waiting in the wings. Come on in here. Larry McDonald, head of U.S. strategy at Societe Generale. He is joining us. We're going to pull a John Madden, and we're going to actually illustrate some stuff. Before we do that, though, why are corporate balance sheets one of your key flashpoints right now?
Well, for 6 years, we've kept interest rates at zero at the Fed, and corporate America has taken on more and more and more debt.
All right, Shadow Trader Uncovered coming up in just about 30 seconds here.
Don't be afraid. I'm not going to bite hard. Come on in.
Sure, it's not a problem if equity prices are rising, but when equity prices roll over, you're left with lower equity market capitalization and high debt level.
Okay, so we have two charts here, and we're going to go to the telestrator here. I guess it's John Gruden style, not John Madden style.
This transmission is coming to you live from Philadelphia. You got it. Shadow Trader Uncovered. Shadow Trader Studios.
Is this, which is the last, what? 3 months?
3 versus 3.
All right. Good afternoon, everybody. Welcome to Shadow Trader Uncovered on this Tuesday, September 8th, 2015 edition. Hopefully, everybody had a great long Labor Day weekend. Markets were closed yesterday. And my good friend and partner, Peter Rezicek, had the show on Friday, as I was not here. And he will be with us momentarily at the next segment. But anyway, I know you guys had a good day on Friday. A little bit choppy. Market was down 270 points. But lo and behold, everyone was nervous about what was going to happen Monday, or not Monday, but Tuesday, when the markets opened here, worried about China. And sure enough, we had a 30-point gap to the upside. So right now, all top-line figures are up almost 2%. Most of them are right around 2% or more. NASDAQ 100 are over 2%. And basically we have, a market that is now gapping up in a way, value building higher, and basically now it's kind of back to anybody's guess where it goes from here. And when I say that, I'm going to show you in just a minute, like I'm going to take a look back at a little bit of a longer term chart. You can see here we're kind of breaking out of the symmetrical triangle on the intraday. So I'm going to back it out to a 30-day hourly chart. And you're going to see essentially the same thing, which is on a longer time frame. We also have a symmetrical triangle forming. And then basically that means it's compression of prices. We've got, lower highs from the top. We've got higher lows coming in from the bottom. And of course, my reference low is Monday, August 24th. That's when we had that big, huge down day where the market was down 1,000 points at one point during the trading session. And of course, ever since then, with volatility cranking up, markets are gapping up and down 30, 40, 50 points sometimes like it's nothing. I mean, the S&P is up 37 right now. The NASDAQ is up 100. I mean, we're up and down 100 points in the NASDAQ like it's 10 points, like we used to have. So anyway, as volatility expands and volatility increases, the range will expand. And so when we might have had, a range during the day in the S&P is 8 to 12 to 15 points, you know what I mean? Now we're seeing 20, 30, 40 point ranges in the S&P, and we're getting moves much, much larger than what we're used to. And that's, that's good for some people, that's bad for others, because sometimes the moves intraday, when volatility is so high, they can be very swift, very sudden, and move quite a bit against you, but if you're, and it's it's not easy to take a 4, 5, 6 point rip in the futures against you very, very easily, but those that have the experience, have the account, and have a little bit more wiggle room on something like that, then there's obviously better opportunity as well. So you either have to welcome and embrace this kind of market, or you need to step aside. and not trade it. And what we're going to be talking about today, I think, is going to be real interesting. I mean, we will talk about, overall broad market charts. We're also going to talk about, some trade setups like Netflix. I know Peter did some more ratio trades in that stock. That was a really good short that I had from last week, and I actually held it into Friday's gap down and closed it. Netflix gapped up today huge, and I thought, man, look at me, I'm a genius. Next thing I know, Netflix is down from the high like 10 points, almost 10 points. $9 and change, I think, off the highs. And I got out, Friday at around 98, and the thing went all the way to 93 and a half. It's still 94 a quarter right now. So, I kind of messed up there. Still made money, but they're just hitting this thing hard. And, we still have a target of 80 to 85 in that name relatively soon, and we're going to talk about exactly why we have that target and the ratio trades structured around that. We put some on. I think Peter even did it. I think we even did it live for you in the room here last week. But I know he also tweeted some out today, earlier this morning, that he's just adding to it because he really likes to trade. I do too. Unfortunately, I was looking to re-enter again because I was short Netflix 2 separate times last week. I was in it short, covered, stock bounced a little bit, shorted it again, covered on the gap down on Friday, and then was flat because I, just like other people, got kind of spooked, like what's going to happen over the long weekend. So the only thing I had was Win. We're going to talk about Win and some of the casino names. Also going to give you some trade setups in that group. The rails, we're showing some decent relative strength today, so we're going to talk about that. Some of the other transports like the truckers also could be an interesting group. And then also I want to talk about some possible trade setups in the 3D printing space. Because there was a group like SSYS and DDD and X1, XONE, and VoxelJet and Proto Labs. I used to trade, especially the SSYS. That's really my go-to stock. So we're going to talk about that as far as some trade ideas. I'm going to talk about, like I said, the casino stocks. When the good thing about when you have good trade location, when a market is down, let's say, and the stock that you have long is up, you did something right, or at least halfway right. You know what I mean? Because if the stock that you're in is, whether you're long or short, right? Obviously, there's a reason, there's a bias. You feel that this should be long, this should be short, whatever. And when the market's going down, and yet the stock that you're long of is going up, that's a good thing. That means it's showing much better relative strength. And some of these groups, like the casino stocks, like the coal names, like some of these railroads, they've just been decimated. They've just been hit hard. And, so sometimes it's kind of a reversal out of maybe the big high-profile names like the Amazon, like the Netflix. And perfect example, short, they're selling Netflix, maybe getting into some of the industrials, maybe some metals, maybe some transport, some rails, maybe some other truckers, things like that. Casino names, right? People might feel that that's kind of a bit overdone. That was kind of my thesis of the whole trade with Win. I bought it a couple times last week and held it over the weekend. But like I said, I did get out of my Amazon trade. So in any event, we're going to talk about all this stuff. We're going to talk about market profile. We also do have some good emails that people have written in. Squawk@shadowtrader.net, by the way, is the email address to the show. So if you want to reach out to us at any point, please send us an email, squawk@shadowtrader.net. Also, Peter's email, of course, asktheshadow@shadowtrader.net. So lots to talk about, but let's back up before I get under the hood and do a read of the internals. You can see here on the intraday basis, we've had kind of a compression, symmetrical triangle, lower highs, higher lows. You can see the trend lines, you can see the little ovals that I have, kind of put on the chart to make it a little bit easier. But here's a longer term, 30-day hourly chart. And what I want to do is just hide all these drawings real quick. But one of the things that I was looking at this morning, is this descending trend line right here. And look at how perfectly that overnight high hit. This was an overnight high here at 1961. And to me, that was like, wow, this makes a lot of sense. If, futures gap up 30. They opened at like 51.50, and if they could go another 10 handles higher, that could bring in some new initiating buying. Remember, we're already opening outside of value. And value, by the way, that's the value area. That's where 70% of the prior day's volume occurred. So we're, big time gapping up outside of value, but as you can see, there's been no real follow through yet above 61, right? So in the same sense, when I use that Monday low and use the swing out method, right, you can see here that we're also in what? Right? Lower highs, higher lows. This is like your key symmetrical triangle that's forming. And the one thing I really like about these kind of setups is it's a little bit tough, a little bit tricky inside, but once it breaks out, once it really compresses, and let's just say futures fell back in and kind of compressed in this area, then it's a great either long trade where if it breaks above or a short if it breaks below. That's it. I mean, now could it break earlier? Of course. But still, this is like kind of a very interesting, it's an interesting pattern which gives you the opportunity for a long or short trade. Doesn't matter. And that's what I think people should really concentrate on, is trying to be a little bit more market neutral, right? If the market goes up, go long. If it goes down, go short, right? I mean, who cares about trying to say, oh, well, it's going down or it's going up? You don't know. No one knows. Believe me, there wasn't a single email that I got from anybody that says, you know what, Brett, we're going to gap up 30 on Monday. I'm staying long. Nobody said that. They just don't know. No one knows. Neither do I. But that's the beautiful thing about the market. You do not need to know what's going to happen next in order to make money. That's one of the things Mark Douglas says in his book, Trading in the Zone, which is on our top recommended reading list. It's a phenomenal book. Anything can happen, in the market. You don't know. It's a big, complex organism of, hundreds of thousands of people from around the world trading, all putting their opinion on it. The whole goal is once one group outweighs the other, whether it's the buyers or sellers, bulls or bears, you want to try to bias with that group, period. So in any event, we're in this kind of symmetrical triangle. This is a 30-day hourly chart. I mean, obviously there's the big drop that we had leading into the August 24th low. I mean, the market dropped basically, 9.9%. And so far it's kind of like, if you will, bear flagging even, right? And everyone, of course, will expect what? To go lower. That's what the textbook says. That's what the trading books say. Your perfect, pennant, bear flag, whatever you want to call it, doesn't matter. You're going down, you bounce, you go sideways, you should go lower, right? Hey, if everyone's expecting that, then I can tell you that probably the opposite is going to happen. Whether you believe it or not, whether you want to listen to it or not, I mean, it generally does happen that way. When everyone, so there's a market, then we're going down, then we're just consolidating, should go lower. Again, that's what the textbook says. And could it happen? Absolutely. But if it were to break from 61 back up to at least test these highs here, why not catch that move and then get re-short up closer to like 2,000? Just a thought. You know what I mean? So that's why I say be a little bit more market neutral than just, oh, I know what the market's going to do. No, you don't. No one does. So you got to kind of roll with the punches, my friends. So that's kind of my longer term thesis right now, is I'm a little bit neutral to bearish. However, if it breaks up over 61, I think there could be new initiating buying in there. But the fact that we have made these lower highs, of course, is still edge to the bears, no doubt about it. That's why I was saying, neutral to bearish. But remember, we also have all these higher lows from here, 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 and here. That is something that needs to be paid attention to. So again, textbook says compression sideways down. But just in case, if we do get a blip to the upside, don't be surprised. All right, that's all I'm saying. So in any event, let's do a quick check under the hood, and then we'll get our friend Peter Rezicek in here in the next segment. Again, we'll go over some trade ideas, trade of the day, some more stuff on Netflix. We'll also, of course, talk about, like I said, some of the 3D printing stocks, some of the casinos. I think there's some pretty interesting opportunities out there. So in any event, as we do a quick check under the hood, the Dow, everything is up, like I said, about 2% or more, or very close. We have 7.4 to 1 positive breath on the NYSE. NASDAQ is about 5 to 1. We started 15 and 13, so the breath did deteriorate a bit, but still, it's more bullish than bearish. We're also at the AD lines. We're up almost 1,800 on the NYSE. NASDAQ right now is up about 1,550. Ticks have been a little bit more bullish as far as the bodies being above the zero line. So NYSE tick is right now down 264. NASDAQ's down 100. Core sector list right now 23 over 2. We were 25 over 0, which means all sectors were in the green. Right now, natural gas and tobacco down a little bit. On the upside, though, railroads, home construction, gambling, transports, right? Some of those groups that I was talking about. And then Jumbotron stocks, everything is up except Netflix. Netflix, remember, Citron put out a research report. I was short, and then they came out with that. It was great. Unfortunately, like I said, I did cover, but that stock is down. Everything else is up. Regin's up huge, like 30 points, 31. Priceline's up 30. You know, so there's some good movement here, mostly bullish. But again, a lot of it has to do with the 30-point gap to the upside today. We've been back and forth through the open, though, many, many times. A little bit more of a low-confidence market, by the way. All right, so in any event, let's take a quick 90-second break. When we get back, Peter and I will get into the profile, trade ideas, you trade of the day, Netflix, probably look at gold, volatility, VIX, things like that. So hang tight. This is Brad Agunis. We'll see you in 90 seconds right here, Shadow Trader Uncovered. You doing all right?
Yeah.
One 1.5% thanks to one guy, Alan Delinko, who finally unjammed the break room snack machine.
Cut. Oh, I feel seasick.
Theo is the revolutionary app where traders can now keep in touch with their trading positions around the clock. From the minds behind Tasty Trade and Dough. Download today and watch your trading account non-stop.
Shadow Trader Uncovered. Shadow Trader Studios.
Very lucky.
All right, welcome back. Brad and Peter with you here.
Welcome back indeed. Back at it on this Tuesday edition. Shadow Trader Uncovered.
Yeah, so futures showing some decent relative strength. The whole market, of course, showing some good relative strength here. Taking back all of Friday's loss, which I wasn't here. You were. Yep. Thank you very much.
Yep.
I'm sure you guys had a lot of fun.
Oh, we always do.
But, you know, Peter, I kind of was mentioning this earlier, but we've just been having these huge gaps where value's breaking away. But yeah,
it doesn't really go anywhere.
And then there's no confirmation. So
yeah. No, I agree, Brad.
I'm kind of in the camp where, you know, longer term, it's, you know, neutral to bearish because we have this like big down move going into that Monday. Then we're kind of consolidating into like that textbook kind of bear flag, you know, pennant, whatever. But, you know, I'm seeing a break over 61 as a longer term trend line, you know, kind of coming down.
Let's look at that.
Yeah, because I wanted your opinion on this. I just showed it to the good people just before you, you know, showed up. But I was basically just looking at this from the August 27th highs, and those touches were perfect.
Right. From
the third last week, and then the overnight high.
Mm-hmm.
You know,
and now we're back there.
And now we're almost back there, right? So.
Yeah, I agree with you. Once you test so many times, the idea is that you probably go a little bit higher. The pattern just looks bullish to me. I mean, that's why I sent a tweet about an hour ago. I said, if this market doesn't go down today or tomorrow, then
it's a good point.
I don't think it's going down. I mean, because look at the daily chart. Look at the daily chart.
Well, the S&Ps are futures.
Yeah, this is the bear flag. So at what point does it follow through to the downside?
Well, that's what I was saying. The textbook pattern says it should
down.
Be lower.
It should be lower. That's right. And then if you look at like where that 20 MA is and where the swing high is.
Yeah.
If you cross the swing high, I don't think it's going to come down. It just doesn't feel
Plus,
like
that
it.
would take out the, I think, or at least we're going to get close to that 61.8% fib, if I'm not mistaken, because I know you were talking about in your video, but from the all-time highs to those lows, that's actually it's between, I'm sorry, it's between the 50 and 61.8. So any kind of break back up over that 1992, then the 61.8, of course, as you can see, is 20, basically 14.
Right.
So.
Right.
Yeah.
So I mean, as far as in the cash, you don't see it. It's slightly different, but in the futures, as you were just saying, you broke through the 50. You didn't get to it in the cash. You know, right? That you go from the all-time high.
Right. I mean, that's different because we're not even at the 50% fib.
That's right.
That's exactly right. So the cash is different.
Yeah.
Yep.
But still, as I keep saying, if you close a daily bar above the 50, that kind of changes everything.
Above the 50%, right? And especially above the 61.8, you know, that's basically a change in trend. So that would have to get up a little bit more. Remember, I'm looking at the futures. You can look at the S&P cash. There still is that differential. Next week is rollover, quadruple witching. So right now,
Fed.
and the Fed, right? So it's going to be a big week. Yeah.
Most important one,
Yep.
I think, is the only one where people are really serious that something could happen.
Right.
I think before this there was never really any chance, but then after they got a little bit more transparent and they said, look, we're going to be looking to do 2 in 2015.
Yeah.
You know?
And I think people are still on the fence as far as the effect, right? If they do raise 25 bips, okay, so
Well,
doesn't mean Armageddon.
They keep